Hey everybody, welcome to my channel. Hope you guys are all doing well today. In this video, I'm going to show you guys how to leverage your assets on DeFi, either to pursue yield farming opportunity with those stables or to use those stables to buy even more assets. So in other words, you would be basically adding more leverage to your overall portfolio. And towards the end, I'm going to be talking about a laddering strategy. So I would definitely watch this video in its entirety because I think it's a great way for you guys to retain exposure to your current holdings and also generate a little bit of liquidity and get exposure to alts right before alt season kicks off. And if you have any questions after watching this video, or maybe you just want to discuss other DeFi related opportunities out there, or perhaps you just wanted to talk about other ways you can leverage these DeFi protocols, I would encourage you guys to check out my Discord channel. With the market taking off, I've seen a massive surge in new members. So if you're interested in joining a forum where you can discuss insights, thoughts, and learn about new projects, you'll definitely want to check out my Discord channel. And if Discord isn't your thing, at the very least, you guys should check out my Twitter profile. Not only are you going to get character insights, but you'll also learn about projects that I'm interested in. Both the link to my Discord channel and my Twitter profile can be found in the description below. With that being said, let's go ahead and dive into this video. All right, the first thing you're obviously going to want to do is head over to app.aave.com. You can either choose between V1 and V2. I'd recommend going with V2. And for those of you guys that have loans out on V1, eventually they're going to enable you guys to transfer those loans over to V2 using a flash loan. I believe that feature is going live sometime this month. But before I show you guys how to take out a loan, let's go over some important details. First of all, when you're paying back your loan or the amount that you borrowed, you're going to have to pay back the entire balance you borrowed plus the interest accrued. With V2, if you want, you can actually pay back the loan using your collateral. So for example, let's say you took out a loan with Bitcoin when it was worth $20,000 and you took out $10,000. Bitcoin has gone to $50,000, and let's say your outstanding loan balance with the interest is $11,000. Rather than paying back that $11,000, you can instruct the AAVE protocol to deduct that $11,000 from your collateral. So if you have $50,000 worth of Bitcoin, it means you're going to be left with $39,000 worth of Bitcoin once the debt has been repaid. And when you're taking out a loan, sometimes you have an option to borrow using a variable rate versus a stable rate. Now, this is pretty straightforward. A variable rate means that it's subject to changing depending on market conditions. So if there's a lot more people interested in borrowing, the rate on the assets that you borrowed is going to go up. Typically, this tends to be transient and it might last for a few days to a couple weeks, and then the rate normalizes. With the stable rate, you have some level of predictability, but if the utilization rate gets too high, then this rate is subject to change as well. And while you have an outstanding balance, health factor is something you guys should all keep an eye on. Because if the health factor reaches 1, the asset that you have deposited as collateral will be liquidated. Not all of it, but a portion of it will be liquidated to help get your health factor level above 1. So before you guys take a loan out, make sure you find the asset that you want to use as collateral, figure out what the loan to value ratio is, look at the liquidation threshold. This way you guys can act quickly if the market moves against you. And in terms of how long you can borrow your assets for, there isn't a fixed period in which you have to pay back the loan. But do remember that as long as your loan remains outstanding, you're going to be accruing interest on the debt that you borrowed. So as long as your health factor is above 1, you can basically carry the loan for an indefinite period of time. Now to get started with the loan process, you want to come here to AAVE, go here to the borrow tab, and automatically here it's going to tell you how much you can borrow of each asset depending on the asset that you have deposited as collateral. So you can see here, based on the collateral amount that I have, I can borrow up to $9,700 in DAI. The variable rate is 13%, the stable rate is 18%, but let's say I didn't want either of those. I basically want to go for the lowest rate possible right now. And right now, GUSD is offering the best rate. Now do be careful because they don't provide any data for the historical rates, and I'd imagine as the DeFi bull market kicks off, the rates across the board for all stables will inevitably go up. But for now, I'm happy with the 1.22%, and I'm completely okay if there's any sort of acute changes in the coming weeks to months, because I'm probably going to borrow this money and then pay it back within the next few months. So now I have to decide how much I want to take out and how much risk I want to take. Now, I would discourage everybody out there from taking out a risky loan. Personally, I like to stay in the green because even though I don't think my collateral is going to be cut in half, I do plan to use my borrowed money. So if there's a catastrophic market event, or if, let's say, the market retraces, I want to have a little bit of flexibility, and I also want some time and buffer. That way, if the price of my collateral falls more than I expect, I can take action and provide more collateral to avoid liquidation. So once I've entered the amount that I want to borrow, I go ahead and press continue. Now here, you would normally have an option between a variable loan and a stable loan, but for this asset, they only offer a variable loan. So I'm going to go ahead and select that. Then I'm going to go ahead and press continue. And here I would just click submit, proof of the transaction, and all the funds would end up in my wallet. Now that we've gone over all the steps you need to take in order to get a loan from AAVE, let's talk about my laddering strategy. I first talked about this laddering strategy about a year ago with Nexo, because Nexo offers a dynamically adjustable credit line. Unlike many other CeFi platforms out there where you have to pay back your original loan balance in order to take out another loan for a larger amount, with Nexo, let's say if your collateral goes up in value, that makes you eligible to take out a bigger loan. Rather than paying back your original loan, you can just go ahead and take out more money from your dynamically adjusted credit line. And with the AAVE protocol, you're also able to leverage a dynamically adjustable credit line. So as the value of the AAVE tokens I have here goes up, I'm able to borrow more and more money. So what one could do is, as the price of their collateral goes up, they can take out more and more money. And let's say instead of buying a risky altcoin, they decide to buy Bitcoin or Ethereum. They can take that Bitcoin and Ethereum to pursue yield mining opportunities in DeFi, or they could just send that Bitcoin or Ethereum to a CeFi platform to earn a relatively safe and predictable yield on it. And depending on what your outlook for the market is, for example, you think the market is going to keep going higher, as the aggregate balance that you have here based on your collateral continues to grow, you can keep taking out more and more money to buy even more assets. And unlike Nexo or some of these other CeFi platforms, the added benefit of using something like AAVE is that you can switch your collateral at any given time. So for example, let's say I think AAVE is getting a little bit bubbly and I think there's a correction coming. With a platform like Nexo, I'd have to repay back my loan in order to retrieve my AAVE to sell on the market. But here on AAVE, all you need to do is go over here to swap, and you can use all the AAVE that you have locked up as collateral, and you could trade it for another asset like DAI. This way you get to preserve your health factor in the event that AAVE has a huge pullback. This tool would have been very useful back in March when we had that liquidity crisis. I remember during that time, a lot of people who were using a similar strategy on Nexo and other CeFi platforms, it led to a lot of people getting liquidated. Having this feature back then would have saved people a lot of money and time, because all they had to do was basically trade their collateral into a stable until the market made a recovery. But the downside of using something like AAVE is that you're going to have to pay gas fees, and they don't offer any fixed rate loans. With Nexo, you could take out a fixed rate loan and you don't have to pay any gas fees. Now, as I end this video, I do want to emphasize this was supposed to be a brief introduction. I did omit a lot of important facts. So make sure you guys watch more videos, consume more information before you guys decide to take out a loan. But if you needed further guidance, you can either join my Discord channel, and I also offer exclusive one-on-one services to people who join my Patreon. And even if you join one of the lower tiers, you'll get access to my private Discord channel. You'll get a free subscription to my paid newsletter. So if any of their service interests you, just click the link to my Patreon page in the description below. With that being said, this is CryptoOneStop signing out. I'll talk to you folks next time. Bye.